and Selwyn. I come from Waterloo, Ontario, Canada. And as was said, a place called Communitech, which is an accelerator, an incubator, a tech association. It's very tech focused. And it's, I'm going to move over. All right. And it was formed long ago. So we're going to begin to talk about financing. So I'm going to get in the mode of financing. And so the first thing you have to be able to tell a customer as an investor is, why the heck should they listen to you? And that's a really good first question for you. And so I'm one of the people that advocate you put the team slide first, not at the end. And so I'm going to sort of do the same. So Communitech is interesting as an organization in that it has now got to the point where in my team, I look after the startup services team. We see inbound about 500 young startup companies per year. About 3,300 companies have gone through the organization since 2010. And then they range in success levels from very, very small and continuing to having failed and gone out of business, right on to several are now doing, and it's probably high tens of millions. I don't think we've got too many that are doing over $100 million, but we can talk about that too. I myself, I was started off in a large telecom company, Bell Canada, left there in the mid-90s, and I have done, I guess, been associated with and led 3 or 4 startups, and those have we've exited in a range of sale price from a couple of million all the way to 425 million. So very, very large range in pricing, and over time those numbers became bigger and bigger. So I came back to Communitech very specifically to try to help with some of the young startups and help them get going. So I am not a finance guy. Most of the time I've been on your side of the table. I've been the one asking for funding and asking for finance. But we've coached innumerable companies in how to get finance. We've talked to a great number of investors. Communitech, just in our database alone, has 2,000 venture capitalists that we try to track, and I'll touch on some of that. So that's sort of where all this comes from. And someone had asked if I would talk a little bit about how do you get funding. I'm hearing that most of the folks here are at a fairly earlier stage of development in their company. So there's the likelihood of getting to VC maybe a little further down the road. But I do want to touch on it because a couple of things about that relate all the way back to family and friends and early stage investment. So if we could, oh, that's our building, by the way, 151 Charles Street. And as you can see, Desire to Learn, Communitech, Google, and many other large companies that come into the area. So if we can advance. I say this caution because I'm going to be talking to you, but I'm going to caution you, in the startup world, there's a lot of people that will be talking to you. And you have to always listen to that as the advice that it is. It's your company. You make a decision, and do not assume that they're giving you good advice. Be sure. So that goes for me too. And the other thing is to remember, throughout the entire journey, no one will care as much as the founders about a company, and you can't expect them to. Not a customer, not an investor. You will have the most and greatest concern for the firm. Investors, in the end, invest for profit. And it doesn't really matter at what stage. If it's your parents, okay, that might be slightly different. But anybody outside of your parents, it's going to be there. They're there to make a couple of bucks. So there's the journey. Personal savings is obviously the way most of us can begin a company, all the way through down to the reason the one in the bottom is capitals, is that's my personal favorite, and I think it should be yours. Far and away, the best way to grow a company is by making some revenue, and making more revenue than you need, and you invest it right back in the company. The last thing I encourage anyone to do right off the top is to go and sell part of their company, which is what you have to remember when you raise equity. When you get someone to invest, you're actually selling part of your company. And you have no idea what the value is of the thing you sold. So think of a piece of property that you buy today and it's increasing in value, and it's a decade from now, you're agreeing to a price today for the value that property will have in 10 years. And yet you're going to sell it today in the knowledge you have in today's price. So when you sell, recognize it's very, very hard to know what you gave up. So give up what you need and for good purpose, and I'll get to that. So friends and family. So these numbers, these are sort of Canadian, US. US is always higher than Canadian. So if you think in Canada, what we call a Series A, or that first investment from an institution, we think of something between 1 and 3 million. In the United States, and I'm using American dollars to keep things simple, in the United States, they would think of it as a $3 to $5 million investment. So they tend to be larger dollar values, but in a large measure, that's because, number one, They have a higher aptitude for risk. And number two, it's a big market. The questions that everyone's going to have, especially friends and family, is when will I, if ever, get my money back? And I'm going to tell you that I'm involved in some angel investments. I've talked to some folks that have done this for a long time. It's not 3 to 5 years. We'll all probably tell you if you've been at it for a bit, it's 10 to 15 sometimes, and that's not an unusual time. You need to have a liquidity event, which is to say go public or sell the company in most instances for those people to get paid back. So when's that going to be? Well, we don't know. And so I will talk a little bit about how it is possible to think about giving them an opportunity to get their money back before some huge, large liquidity event like selling the company. The other thing too is that on the fundraising, somebody mentioned in the questions and answer period earlier this concept of cap table or capital table. That's basically a list of everyone that owns your company. So today it may be you and one other or you and two others, but as you go out for investment, that list gets longer and longer. And so with friends and family, let's say you have 4 or 5 members of family and you have 2 or 3 friends, and then you have you, suddenly you have 10 owners of a company. And then those 10 owners will have some rights about what you do with the company, and you have to get some agreement in order to do the thing you want. And so this would be the number one considerations here to take away on this whole friends and families. Number one, it's going to be very personal. It will add to stress. You will stress a lot about yourself and your success, but if you're a person of good conscience, which I assume you all are, it will actually bother you more and you will worry more about the money you've taken from someone else. You'll actually lie awake at night thinking about, what have I done? How am I going to pay those people back? How are they going to get their money? Way before you'll even be worrying about getting your own. So be cautious, be sensible, take only what you need, think about the fact these are relationships, and again, go back to it could be a decade. And be very upfront and reasonable about, hey, this is not some quick turnover stock deal. This could take a while. So I don't know the climate here, and I apologize, but I'm not sure how much is available with government. Canada, we're very fortunate in that we have quite a number of sources of government funding at the early stage. Funding that would be in the range of 25, 30, sometimes 60. They take various forms and they can go all the way up to as high as $1 million in unusual circumstances. And so that is an avenue for companies. In the United States, they're a little bit jealous of Canadian startups because we have money that you can recoup from your R&D in a new and interesting product set. So it's called RSED. But it's basically for research and development, but you have to spend the money first. So if you do something that's unique and unusual, and you have to keep track of all of that. So that's back to the minister's comments earlier, right from the beginning, start keeping track of stuff, register your company, be aware you've got taxes. The other one is track your expenses. But that's an opportunity where you can then apply and get quite a substantial portion of that research and development back. So that's very helpful. So look into them, find out who will know, see who's setting something up here. You never know. These gentlemen right here may have a fund before you know it. One of the things we do in Canada when the government, which I like, the government provides funding in a fund, like an investment fund, they will follow the lead of professional investors. So they don't make the selection on the companies, but they provide additional funds to the fund. Then when the investor makes a decision, some money from the government can go with it. So there's just things to be aware of. And be aware too that this morning the comment was made, you'll have some obligations from whence you got this money. If it's government money, that's the same the world over. So whether it's here or anywhere else, there is an expectation that there's a value to the country you received the money in. So the other one, which we touched on briefly with Angela, is accelerators and incubators. And I trust you've all heard of certainly Y Combinator, which was the first and probably the best known. If you haven't, have a look. They've gone international with Techstars and whatnot. So 500 Startups is different. 500 Startups does large numbers of investments with fairly nominal review and diligence. It's a numbers game. They figure if we invest in enough of them with some intelligence, sooner or later, we're going to get a big out. And so the Y Combinator, for example, their biggest success so far is Dropbox. I'm not sure if any of you use that, but that's a very successful outcome for them. That one successful outcome makes up for literally hundreds of unsuccessful outcomes for them. So it's a very, very different game. They are very, very strong on mentorship. They're also very, very strong on networking. They've been at this a long time, I think, 2009. or even earlier for Y Combinator. But anyone who's been there, and we've had quite a number of Waterloo companies there, just can't say enough about how strong the mentorship is, and better yet, the alumni program. So they stay in touch afterwards. As these people become successful, they all help each other. So that's something you can do right from the beginning here, as you can begin to network with each other. And as all of you grow and succeed, you continue to help from each other. You buy from each other, you advise each other, you provide leads and other customers to each other. It's very, very powerful and very, very important. So Communitech, so what do? We did, a little while ago, we had an accelerator where we did take some equity. We don't anymore. So on my team, we have 4 accelerators right now. The most advanced of that is all about what was mentioned earlier, and that's selling to customers, increasing revenue and accelerating revenue. And so in that particular case, we do provide the mentorship and networking. We do not take any equity. But in order to be eligible for this, you have to be a Canadian registered corporation. Again, because some of our funding is coming from the province and the federal government, therefore there has to be some payback to that particular jurisdiction. So angels, so we talked about angels. Angel investing is almost always an individual or a small group where the people are of, I'll call it high net worth. At a minimum, they have some disposable income. I myself and Elaine are invested in a few companies, so we would be amongst those. There is groups, the largest of is Keiretsu Forum. You might find it interesting to look up Keiretsu Forum on the internet. That started out of California, and it's now an international group of angels that cooperate with each other globally. And when I say cooperate, it becomes quite effective when an investor takes some investment in the United States. Another investor has taken in their group investment in Istanbul in Turkey, and then they find out that the one investor's company can provide something to the other. So back to that networking, they will actually, this whole concept of Keiretsu being Japanese, and that's where they all work together cohesively, and it's quite powerful. They also, because they're a group, they can invest more. We should look up where they are. They may actually have a Caribbean presence, and so you might want to look them up. Diligence skills. So diligence is when you've talked to your investor, they said, we're very interested in what you're doing, we like your team. Probably the reverse of that, they like the team and then became interested in what you're doing, because that tends to be the way, and they want to invest. Now they have to make sure that you're telling the truth, that the product actually works. They'll talk to customers if you have some, and hopefully you do. They'll ask the customers what they think about it. It's all work that you should have already done, but that's the diligence. They'll also check criminal backgrounds. Like, they just make sure that they know what they're getting into. At the angel level, this is very, very, it varies in quality widely. There are some that are very good at doing that work, and there are some that are very, very bad at doing that work. They make it on impulse, they make it on poor judgment. So even though you've done this and you've got a good investment from angels, when you go to the venture capital market, they're going to do it all again. Just because it's so haphazard, they're going to not trust it, and they'll do it again. But it's very good to get in the mindset. And this Keiretsu Forum, my experience with them is that they have a very good methodology for their diligence, and I think some of that information is available right online. So if you want to look up the kind of stuff they might ask you, it's a good place to go. Oh, and you saw at the bottom of the screen, just to remind you again, angel investors, large numbers of them. You took a whole bunch of friends and family. Suddenly now you have got 20 or 25 owners. So again, this is hard-won knowledge for most folks, that as time goes on, this becomes very, very difficult. So be careful how many owners you take of both these varieties. So venture capital. So I want to talk about this, even though you may not be ready for it yet, although some of you may be, because there's a couple of vehicles that I wanted to touch on, and then I'm hoping we can get a little bit of Q&A in case you have particular questions. But structuring a deal for a company that's really young is super hard. And this is my personal opinion, but I would say there's others that will share this, and that is, you have no idea what the company is worth. And anyone who tells you that they do have a sense of what you're worth, I would not be trusting that comment. It's impossible for you to know. And we have all these companies that are in the university accelerators, and quite coincidentally, you'll ask them, and they're all worth $5 million. Like, why 5? Well, and it's because they heard the next guy and the next guy and the next guy, and well, he said he's worth 5, his stuff's crap compared to my stuff, so I'm worth at least 5. And this is not going to survive the due diligence process, right? So understanding that you don't know what you're worth, a couple of vehicles exist for you to get invested in that could also work for you for friends and family, and they can also work for you with angel investors. And that is that both parties agree we don't know what I'm worth. You've met me and you like me and you think I'm driven and motivated. You met my partners in the same. You like the idea. We've talked about the market. It seems very promising, but we don't know what it will look like. And so they are now taking a very, very big risk on you and a very, very big risk on your company. So how do you reward them? And so that's the form of these documents. So two things to be aware of is on an equity investment where you take a large sum of money, then they're probably going to set your value. So that's when you get into the VC market, they will be determining a value, which means that in order to be here, you do have revenue, you do have customers, they like to call it traction, you've got good opportunity, you've done something here in Barbados, and you've got this model written out so well and with such great understanding that you say, I can take this and I can drop it into all of the rest of the islands in the Caribbean. I can drop it into Southeast United States. I can drop this into some part of Europe because each one of those markets do these things in exactly the same way and I can fit into that. That's that growth opportunity. I can see how this will be able to spin out. That's why the investor will be interested in you. They'll go through that conversation. They'll try to measure all of that and they'll say, here's where we think you are in that journey. Super hard to do, really, really tough. Better than that, in my mind, if this is your first time, is a convertible debt note or something I'll talk about when we go down screen called a SAFE. The convertible debenture is literally a loan. They set an interest rate for you and they say, hey, I'm going to give you $200,000, $300,000, $400,000. This should last you. You will have agreed, by the way, on how long that'll last and what your plan is to do with it. And I'm going to loan this to you, but neither one of us have to acknowledge what you're worth. What I want to do is I want you to agree you're going to pay me an interest rate, right? So in the event that I can never go and get my money back, this liquidity event, as they like to call it, I'll know that I've made some form of interest. I'm going to let it accrue. I'm just going to let it keep piling into the actual loan itself. You don't have to pay me the interest. And then one day when you go, because we're planning on you growing, when you go in to get additional investment from a larger institution, or in the case of Angels, from any institution, at that time, when that value is set, a couple of things are going to happen. One is I'm going to get credit for my interest plus the amount that I loaned you. And then the other thing is I'd like you to give me a discount on the stock price that's set at that time. And the reason you're giving me that discount is because it was super risky for me to give you this money. The bank didn't loan you money because you had no assets to speak of. I let you have this money just trusting your performance. Therefore, when you go and get this investment and you've really got this thing off the ground, I want a discount. So if you go out and your share price is $10, very normal would be 20%, very, very normal, you'll see it a lot, then I want it for $8 a share. So right away, in theory, I'm ahead. I can't sell them, but I'm a little bit ahead. The other thing that you can do is a cap. And a cap, you hear this, this is what you'll hear the most, by the way. You'll hear these things over and over and over and over again if you talk to anyone in the investment side. A cap is our agreement that I will only have to pay a maximum valuation when you do this conversion. The conversion being from this debt, this instrument that I've loaned you money with, to now I'm an equity owner. That's the conversion. So you're going to take the money I gave you, you'll add the interest rate if we've agreed on one, you give me my discount, and that's up to 5 million, let's say. If it's over 5 million, I'll only pay at the rate of 5 million. So you're going to give me a pro rata share at the lower price. So it's like the discount. So if you're wildly successful and now you're worth hundreds of millions of dollars, I still get my shares at a value of 5 million. Does that make sense to everybody? Okay, so it's not the same as the discount in that a discount will be on any price, but the cap sets this limit that I won't have to get my shares turned over at any price higher than this, which could be massive. So if it was that Dropbox example, you can imagine if they go out to the market and it's a $35 share, and we've agreed that I get it for 8, and now I'm in the public market. Plus I get credit for my interest. That's the dream come true. That happens like 1 in 10,000 times, right, to be realistic. So hopefully that's helpful in that. If you go to the next screen, we'll do SAFE. And you can see that it's just simple agreement, truly a simple agreement. The whole concept of this is that it's no longer debt. So there's no interest to be paid. This grew out of some work was done at the folks at Y Combinator, Paul Graham and others there, very bright people. You should read Paul Graham's blog. He's very good at this. But it's not a debt. All you're going to argue about on this thing is what's my cap? So we're going to agree that I don't have to pay anything more than a valuation of that $5 million. No matter what happens, you're finished. There is no interest. You owe them no money. You've agreed on the cap. There's no other terms to speak of. It's a very simple, probably 2 pages agreement. This is a very good way to do and structure the deal. It's good for both parties in ways I can't take the time to explain. It avoids strange taxes. It avoids all kinds of weird things that can come out of preferred shares and all those things. It's just really nice and neat. And investors shouldn't be shy of doing this because it's also good for them in many ways in the simplicity of it. So those 2 things, if you get to that stage, and I hope you do, are 2 things to know about and understand. But if you just understand it in simple terms, that is, give a break to the guy going in at high risk. It's fair. You should, because it is a very high risk. Most will fail that they invest in. And then at the same time, set some limit. If I'm crazy successful, you'll get some shares at some lower price. And that's kind of all you need to know. And then people will just complicate this and complicate this and complicate this. Try to avoid those complications. So the bank loan's tough. The reason a bank loan is tough to get started, so we'll go back to the early stages, you don't generally have a lot of assets. Banks are not venture capitalists, and they're not angels by any means. So no offense to any bankers that are in the room. But they have a responsibility to the people that have invested their money in the bank. And so they need some sort of security. And that makes it very, very hard, especially if you're doing software or it's something where you need the money to, in fact, buy the machinery or the real estate or whatever you need to do to get started. Then if it's real estate, they might understand it. If it's machinery, it loses value the moment that you take it home, the moment you take it to the factory, they don't really like it. And so it's tough. If you can, my recommendation would be whenever you can, take debt over giving up equity, because we're back to, I want the last thing that I do is to sell part of my company, right? So in terms of revenue, it's a wonderful thing if you can generate revenue. It's the goal. It's what you'll be pursuing forever. All the other talks during the course of today and tomorrow are going to be essentially focused on this notion of how do I get to revenue? How quickly can I get to revenue? How much do I have to spend to get to revenue? Revenue is everything. In fact, when we created our probably most advanced accelerator, it was because we saw in our area where we had all kinds of great thinking and great engineers in Waterloo, and that they just were not focused enough on the concept of selling. Selling is difficult. There's a science to selling, but if you get good at it, then you don't need to sell parts of your company. And if you make a profit, you can take that profit and invest it back. So that's where you want to get, and the sooner you get there, the better. So this would be me talking as an individual, and that is on the opinion part here. Equity, I only think you take equity for an opportunity that exceeds what you're giving up. And so you should be able to draw on a piece of paper a little circle, and you say, if my slice of my current pie is worth this much, and I'm going to sell some of that, I have to have fairly great degree of certainty in my head, and only your head, because remember, you said we were all arrogant if we're entrepreneurs. So you're arrogant enough to believe that you're going to do what you say you're going to do. But you're going to grow the company enough with that investment that your slice will be bigger than it is today. And if you can't do that on a piece of paper to say, hey, if somebody loans me $100, I can, and I give up 10% of my company, it doesn't matter because I'm going to grow this company so much with that 100 that what I own will be worth more than what I have today. That's the reason for equity. It's very key. And just always ask yourself, is this worth giving this up for? Because you got to remember the investor side, he wants the best deal. So do you want the best deal? And that's a good measure. And then the resulting pie, like whatever, and literally on a whiteboard, on a piece of paper, if you can't do the math, don't do the deal. Yeah. So you're going to want some documents. I would suggest these are 2 great places to go. So I mentioned Y Combinator and Techstars. Techstars and 500 Startups have gone international now. They have presence in Canada and Europe and all over the place. So I would suggest you go to these sites and they will give you an example. Y Combinator will have a very good example of the SAFE agreement, the simple agreement. And then you can look at it, give it a read. There's even, I think, a bit of a primer there that you can get comfortable with. And again, I recommend that you think about using that even at the angel stage of investment because there's no reason not to. It's just very straightforward. And when you do deals with friends and family, do the deal properly. Always write it down and do a deal. So there's no reason you can't use very similar documentation for that. I don't know what else I've got. Nope, that's just me. So, and that's my email. Feel free to send me. We've got lots more sources of information I can provide you too, all on the web and all available. There's tons of information out there. But I want to circle back on the concept of investment to remind you that the good investors will look at the team first. We had a thing, so we have 500 companies every year come through, and we thought, and somehow when about 20 of us all together, we have mentors, we have managers, we have me, we will get together, and we do this every 2 months, and somehow we agree on sort of the top 30 companies, and that would be about 10% of the people active right now. So right today, probably about 350 companies are actively getting help from us. And yet they would be good companies, and they were most of the time would do well. And so we said, how is that happening? Could we figure out what it is in all these very different minds that can, and the only thing we've gotten to date, and we've got people actually studying this, because you can make a lot of money if you could figure out how to spot a really good startup. And the only thing that's consistent from everyone is team is first. And so the investor is going to worry about the team. They've got to believe in you. A little arrogance can go a long way. Just change arrogance into confidence and be sure that you're comfortable that you've got the resilience to do it. When you pitch to them, they're going to look at you first, very first. In the United States, even more so. They'll look at you. They don't even almost want to look anywhere else. They want to talk to the founder and see what the founder's made of. So never doubt yourself. And then the other thing you'll learn as you go out, and I encourage you all to go out, come visit us, go anywhere else, is you're as smart as anybody else. Like all these stories you hear, and I remember the first time, and in fact, Elaine will know this story too well, but the first time I ever went to New York, I was pretty nervous about the whole thing. And after the first day, and got beat up pretty good the first day, because it was in a totally different way, very blunt, very to the point. Had I bankrupt anything? Had we done as an investor sold? Like they just asked all these questions, and it was just came at you. I felt at the end of the day more energized than I'd been before, but I also realized these guys are no smarter than any of us. You know, we Canadians are just as smart as them. Their questions in the end are the questions I would have asked. The information they had was information I knew. So you have to walk in there, be prepared, know your business, know your numbers, but also be confident. Don't be surprised. You're going to find out the world over, you guys are just as smart as anybody you're going to meet when you leave and head out and try to get investment elsewhere. As a last note, and then I'd like to take any questions you have on particular investments. I've done all of the above. I've taken friends and family, angel, VC, as well as investment bank. The most I've raised in one shot was 65 million. And the least I've raised was when we just kicked off the early thing, it was 100 grand. And that was just from a bank. My first business, I just borrowed the money. So there was one more piece I wanted for you. It'll pop into my head if we take some Q&A. Do contact us. We also have, it was interesting, we were talking in the hall, Communitech and a number of other organizations like us have information on our websites. That's all available. And on top of that, there's also opportunities to come and visit. And there's also opportunities to pitch some of the investors in all those locations. And we can talk some more with you guys and get all that stuff on your site as well. So is that close to what we wanted to talk about in funding? So I think you're probably at the early stage, but I did want to do VC because I think thinking about the way they structure that's not a bad thing early. So is there any questions? Is there anything in particular I can answer, sorry.
Okay, good morning, everybody. My question is, what advice can you give to someone who's operating more in terms of social entrepreneurship? I know that we're here talking about products and business and service, but I know that that's also very huge. And you may have individuals who run organizations where it's really just social. You're talking about nonprofits, charities, etc. So of course, it has to be run like a business as well, but it's not just, most persons are not just in it to just generate revenue and be able to go out there and conquer. So what advice can you give in terms of operating in terms of the social entrepreneurship model?
Interesting you should ask. We do have social entrepreneurship support on our team. We originally set up just the concept of being social entrepreneur seemed very foreign to the rest of the businesses that people relate, and they set up a separate program for them. In the last year, we've taken it, realizing when we mentored them, 80% of everything they did was the same as any other for-profit business. Right. But then there was some unique things, and so we've become more and more expert, and we're not there yet, in this concept of I've formed my business to solve some social ill or to do some good, and then secondary to that, I have to make money so I can sustain it. Like I'm not going to get handouts, I need to keep making money. So that's our definition of a social enterprise. One good thing is to look at the criteria to become a B Corp. Are you familiar with that? It's just B Corp. It's an American designation. But it's, if you know ISO or any of these other standards, it really helps you to more formally construct the company's process so that you do fit with the definition of being social entrepreneurship. So that's, and that, all that information is all available for free as well. But that's just a good piece of discipline. And then the other thing we find is that what's different is the way you structure the company is unique, and the way you finance the company will be unique. And so on structure, it's very important to get some advice. It's so unique, in fact, that one of the large Canadian law firms, that's a very large firm, has actually established a practice just for the legals for social entrepreneurs, because they're structuring them in very, very inventive and unique ways to help them to be successful. And then for the other concept will be the funding. You're going to find that you're in the category almost of angel investing. Most of the companies need to find a benefactor that's a company or an individual who believes in that mission as much as they believe in getting their money back. And so you have to start to learn to speak to your mission for the company first, get them wedded to that concept, and then convince them that you can be sustainable. And so, you know, we offer what we think is a fairly good methodology for you to try to reach out, because you're going to grab the heartstring first, or the social responsibility string. And I think that this generation now, sort of the 20 to 30s, are much more socially conscious, like that they're much more open-minded to, I want to do more than just make a living. So it's a good time to be a social entrepreneur, but I would say focused on those two things. And if my email's there, send me a note. I'm going to send you a link to one of the best pitches that we've ever seen that's a social entrepreneur pitching in San Francisco, and it's almost flawless. And it'll be a great example of how to pitch for investment. Any other questions?
Hi, morning.
Morning.
So I'm aware of, and you as well, the different sources of capital. And one of the places you can have, for example, like the Kickstarters and those kinds of places online. Now, what we'd like to know from your experiences, what are some of the legal considerations when you are raising capital using those means, in terms of you have your structure, in terms of your equity and your debt, but what obligations should you be what obligations should you be considering legally when you take funding from, let's say, the internet and stuff like that, especially when you're looking at cross-border? You know, they're in the US, they could be anywhere, but they're usually cross-border considerations, for example, in terms of like PayPals and stuff like that, cross-border taxations and stuff like that. So what can you give us or tell us about some of the considerations we should be looking at?
Now, do you mean when you're taking an investment, you're going to an accelerator that's not in Barbados? You're talking about
yeah. So you can go online,
taking an investment from some other country.
Yeah, so you can go online,
not.
go on Kickstarter, pitch an idea, get funding and stuff like that.
Okay, sure. Well, I can tell you that one good moment for us. So we have, I don't even know anymore, lots and lots of companies that came out of the University of Waterloo have gone to Y Combinator. That's the oldest of the ones you mentioned, and for a long time, they insisted on this Delaware, that they reincorporate in Delaware, and that they basically move their company to the United States. And that's very disheartening when you're the guy up in Ontario that's raised them, trained them, and back to the minister's earlier comments, gave them their vaccines and all that, and then they just leave. And so one sad moment for us was Pebble. Are you familiar with the Pebble watch? It was a big kick. It was, I think, the biggest Kickstarter campaigns back to back. Well, Eric, who runs that, is from Waterloo grad, from University of Waterloo. He was actually my co-op student, coincidentally. He tried very hard to raise money, went to the US, to the Valley, raised all his money in the US from both Kickstarter as well as on the private side, private equity. So in his case, he said no one would fund me. The conditions were that he had to move. So he's now in Palo Alto, California, and his company is growing there, and there's no benefit ever going to accrue back to Ontario. So two guys broke that, a company called Vidyard and a company called Thalmic Labs, were the two that said, look, we're really good and we know we're good. And so if you want to invest in us, these would be especially the Valley investors. We want to set up our companies at home. And we have all kinds of good reasons to do that. So sort of broke the trend. So I only tell you those stories in that you're going to face stuff that everyone faces whenever you go abroad, especially to the US, because for sure, they're pretty confident they do it best, and they're pretty confident that you'd be best served if you were right within an hour of their front door. So legally, number one, do decide before you even ask, am I interested and am I willing to incorporate as an American company? And is that the long-term goal of what I want to do? If you go to Tel Aviv or London or Paris, where there's all accelerators, same thing. Read the agreements as to what their requirements are. And in the long term, is that really good for me? And then in reading the agreements, so for example, 500 startups, they take equity, right? But they'll give you $250,000. This will be the equity play, but only 200 will be equity. $50,000 will be taken off the top, and that's for the time you're spending in the accelerator. And it's important you know that, because you're going to give them $250,000 in equity, well, convertible equity, a note that will become equity, and they're going to give you $200,000 in cash and 3 to 6 months of assistance. So you got to watch for that. And then, is your product transportable? They may take you, they may be excited by you, but if I am forced to go to some other country, what does what I'm doing look like in that space? Do I feel I can be successful there if I've been forced there? So I guess number one is read the whole deal. Like, always read the whole deal, right? That if they're taking some form of equity through a note, I would like to think it would be a super simple convertible or even a safe agreement for the equity. Take a look at what expenses they're taking out to cover for the time that you're there and they're teaching you. So for example, at Communitech, the reason that we're fairly constrained is because we're funded. We take no equity. There's no downside. We're not on the cap table. They just get some help for a while. So that's a pretty nice deal, but they don't get the cash that might give them living expenses. You may want the $50,000, right? Because I got to rent an apartment, I have to live there for a while, I got to eat, etc. So just be careful. They all have some combination of those things. They take some equity. You want to know what form is that equity coming in, if it's convertible note or a safe or something that I haven't heard of before. And then the other thing is, what am I not getting? In other words, the $50,000 off the top. What are they giving you? Mentorship, introductions, alumni network, get you in front of a whole bunch of investors you might never meet otherwise. There's all kinds of good reasons to go, but those would be the things to watch for. And then yes, even on your product set, watch out for tax rates on crossing borders. So if I'm going to set up there, but I think that most of my customers are going to be somewhere else, then that may not be the place to set up, because you don't want to have to deal with that. Is that helpful? Yeah. I wait for time, Selwyn. Okay, wrap it up? Okay. One more question.
Good morning, Steve. I'm Marcel Greenidge, and I'm the principal at, excuse me, Friendly Society Communications, as interestingly enough, CSR Communications principally. You have focused on high growth companies, essentially.
Yeah, once you get past Angel, for sure.
Exactly.
Yeah.
What of those companies that are not yet there at the criteria that you've set for companies as a high growth company? How do you get them to meet that criteria? Sorry.
Well, that's where the angel investors and the friends and family come in.
So you will not touch them until they have reached that criteria. There's no part of your guidance to them that helps them to reach that stage.
Oh, for Communitech itself?
Yes.
Oh, that's not it at all. This is just the investment part. The Communitech, we will take anyone, and now we're tech, Communitech.
Yes.
But there's other organizations that take other companies that are not technically focused or technically based, but we take anyone with an idea can come and see us, and we will spend time with them. We, of course, is to help them on basic business fundamentals, literally called the business fundamentals. How do you set it up? How do you incorporate? Things you have to worry about not to get into trouble, like source deductions and all the things the minister mentioned. So no, we will help them from a very early stage. And then we like to think that when they get ready to take investment, which is really where this presentation begins, that they are in shape to actually be able to present, to ask for the money, that they're organized and able to answer those questions, that the business makes sense. Sometimes we'll have to be very, very honest and say, you seem like a really nice person, but this doesn't seem like a really great idea. Those are difficult conversations. So we have lots of very early stage assistance. That's why you heard, so we took 500 in a year, and each of the last 3 years, roughly 500, but only 350 are active with us right now. Some have gone off and been successful and done their own thing. Many have closed that down and are thinking of doing something else. Others have gone to some other city or whatever, but you can tell that there's a rapid attrition rate. So out of the 500, probably 200 go away fairly quickly. They realize it's too daunting, I can't afford it, I can't quit my job at this time, and this company would need me to. So no, there's lots and lots of help at the early stage.
Thank you.
Okay. All set? Well, thank you. Thank you very much.
Thank you very much, Steve McCartney of Communitech. Next in our masterclass is the branded experience, the art of funding and retaining customers. And that's by Selwyn Cambridge of 10, the Entrepreneurship Network. And Selwyn is an entrepreneur and the driving force behind the newly created regional startup community and accelerator 10 Habitat, an initiative that's helping to foster a nurturing environment for the growth of entrepreneurs. He's also the founder of the Caribbean Startup Summit, working to empower regional startups. So let's give a warm welcome to Selwyn Cambridge.
You hear me? Yes, you can. Okay, just quickly before I even get into my presentation, which I have no slides for, but I like to make things as interactive as possible. So I'm hoping that you will not disappoint me and you really grab hold of this and ask tons and tons of questions. But just to respond to the comment from, is it JCR? The last young lady that asked the question. I hope that you return tomorrow when we officially launch 10 Habitat. It will address a lot of those questions because that's the reason why we're doing what we're doing, because we recognize that there's a need and there's a gap that needs to be filled. So we're going to address a lot of that. So how many of you in the room are entrepreneurs? Good. So then I'm assuming we've got some brave souls in our midst, right? Yeah? How many of you have challenges with finding and growing your customer base? Excellent. So then if I choose to call one of you up here to pitch to the group about what it is you do in your business, you will take that opportunity, right? Somebody said yes. Who's that? Who said yes? There you go. Come then. Yes, give him a round of applause. Yeah. So this is what we're going to do. We're going to do this in a very interactive way so you get an understanding of how it is you go about doing what we're going to talk about, which is finding and growing a customer base. Right? So you're going to use my mic. I'm just going to share it with you.
I'm glad I'm short today.
Yeah, well, we'll see how that goes. So tell me just quickly, who is your ideal customer? Who are your typical customers?
My typical customer will be startup companies and young professionals who have extra money that they're willing to invest into new companies.
Okay, so his primary audience are startups, right? So that means it's just about this entire room, correct? Yeah? Come on, guys, yeah? All right, so now this is what we're going to do. Now, typically, enough research has been done to show that just about 3% of people are in the market to buy what you want right now, right this minute. And just about 6 to 7% are probably considering it. Then the 90% are split into 3 segments, which is 30% would consider it, but not thinking about it right now. The remaining, the second 30 is not entirely aware that they need the service or the product. And then the remaining 30 just don't want it. They're not interested. They know for sure they don't want it. All right, so you've got just the 3% that's interested and would buy your product right now. So let's just test this for a second. Now I want you to explain, just briefly, I don't want to give everything away, just your product. Just explain what it is you said your target are entrepreneurs interested in investing in other startups, is that it?
So what we offer is a service basically. So you sign up like a subscription, and when you come on the platform, we rate you based on your ability to use capital, and we link you to investors. So investors could have an investor subscription, entrepreneurs have an entrepreneur subscription, and based on your compatibility, we will link investors to entrepreneurs.
Okay. How many of you would be interested in that right now? 1, 2, 3, 4. So this, look at it, it's about 5 people that we just counted right now of a room of what, about 50 or just over, right? Probably more. Now, I want you to look at something for a second. Now, what we're going to do is I'm going to ask all of you, not just the 5, but all of you to just raise your hands. So because you fit the demographic of who his customer base is. And I'm going to have him pitch to you, okay? And this is what you will do. Anytime he starts to say something that just does not appeal to you, take your hand down. Let's see how long he is able to keep the hands up in the room, okay? Yeah? So let's everyone just put their hands up, all right? And he's going to pitch because you are his ideal customer. So essentially what he's pitching should hold you for the duration of his pitch. Isn't that right? Because you are his ideal customer. The time he starts to talk a load of rubbish, you put your hand down, or from the time you lose interest in what he's saying, you put your hand down. Even from the time he opens with the first word, put your hand down if it does not appeal to you. We got it? We're clear? Good. Oh, he's going to get mic. Wonderful. So now I can get my mic back. So this is just a little experiment, but it's kind of designed to demonstrate the theory of how you really go about developing an effective customer acquisition strategy and growing it from a branded perspective. All right, so are we ready? Everybody's got their hand up? Excellent.
Hello?
Oh, not from hello, please. Don't have him at, don't have him at hello, please.
That's
all right. Go ahead.
My idea is called Enduna. Enduna is a crowdfunding platform which aims to connect entrepreneurs to investors. What we are doing is that we're targeting the problem that entrepreneurs are not easily able to find the financing. Let's picture a very simple scenario. You want funding. Someone is willing to give you the money. The challenge is that how do you get the money to your company quickly? What Enduna aims to do is that anyone can invest in your business from the comfort of their homes, from the comfort of their phones. And for entrepreneurs, you get the value of people being easily able to understand your product, understand your company. And for investors, you get the ability to invest in companies at an early stage. And we're looking at high momentum companies.
Go long, boy. Go long. Look it's still
okay. What we do is that we work basically on a software as a service model, which means that as an investor, you sign up on Enduna and you can pick one of 2 categories. You can either be a normal investor or you can be an angel investor. You pay different fees based on the categories that you choose, and you are given the option of different companies. So angel investors get more risky companies, normal investors get low risk companies. As an entrepreneur, you sign up, you can either sign up to be, you could sign up on 3 levels.
All right, you're not presenting. You're taking all the time, but you do.
Sorry.
He's done a good job. Give him a round of applause, please. Good job. Thank you. Now, thank you. What he's essentially done, let's just test what he's done. Why did you all, anyone can answer, why did you keep your hand up for the duration? Anyone? You wanted to hear the whole story? Right. So would part of that be because he connected with most of you on an emotional level, being entrepreneurs, and you have this challenge when it comes to funding and financing? Right. Correct. And he said it early. Good, good. So here's you telling yourself exactly what most of us know, but we never do. And that is, most people buy why you're selling something and not what it is you're selling. Just understand that, because you first got to be able to connect with them on an emotional level first. So most entrepreneurs tend to have this mistaken process or mistaken notion that I need to sell my product. The worst thing you can do to grow your customer base is to sell. Believe it or not, the best thing you can do is to educate. You educate your customer, you educate your prospect, and you will eventually convert them into a customer. So your objective has got to be on how do I connect on an emotional level to my ideal customer. And it goes back to what Angela was saying earlier, which is about looking at the market and being able to understand the market and how exactly is the market construed and what problems are you really solving. Most of the entrepreneurs I've come in contact with, we've got to sort of decode a lot of their preconditioned notions about what it means to sell, and understand that you have to focus less on the product at the initial stages and build a branded story. And I'll talk to you a bit more about that in the workshop later today, about how do you go about building a branded story. But the thing is, the reason, where is he? What's your name? Amlet was able to connect with you is because he clearly shared a passion of yours that resonated with you. That's the first thing you want to do. And so when you start to construct your strategy for customer acquisition, first think about, if I walk into a room of my ideal customer, how many of them will start to walk out of the room the moment I start to talk? Or the moment I put my print ad up on the screen, or the moment I run my television commercial, or the moment I run my radio spot, how many of them are going to change the channel? How many of them are going to use the opportunity to go to the bathroom? Right? And that's where, because we've got to be able to start to get to that position. And I will not claim credit for this. There's a guy that's called Simon Sinek that developed what is called the golden circle, and right in the middle is the why. On the outer skirts, it's the why. It's the how, and then further out on the angle is the what. So you focus on the why about your company first, and that why is primarily fueled by the who, in terms of who your customers are, exactly what challenges are you addressing, how does this connect to them emotionally. So that's where you really need to start to focus. Now, I'm not going to talk anymore. I'm going to give you the opportunity to ask as many questions as you want to ask, and I hope that you've got a lot of them. Yes, go ahead.
Yeah, I'll make an observation. I think one of the things also is that he actually is addressing a need. He actually obviously did market research and created something that actually serves the need, because from the time he started talking, before he started talking, I think people were interested because we're startups with this issue, right? And then I think we were looking to hear where he stumbled or where he veered away from what our needs were. But I can see he's done market research and he's done something that meets the need. So I think that ties back to what Angela was saying earlier, that if you understand even if you have a product, if you understand what the market wants and design your product to suit the market, you'll capture people's interest greater rather than, I have this, and then let me go and try and sell what I have and persuade.
Very good observation. And he's absolutely correct, because you're not in business for yourself. You're in business to solve a problem. And part of knowing what the problem is finding out from your audience. And you're only going to grow or even find customers if you invest the time in knowing exactly who that customer is. So I often say, any business that's about to start a business or you're going to get into business, speak to know directly not through, some online research platform or through a questionnaire. Speak directly to no less than 100 potential customers. No less than 100, at least. And the reason for that is they will give you such invaluable insight that by the end of that exercise, you might change your business plan and your business idea entirely. Entirely. And part of that has to be fueled by your willingness to learn. So that when you get up and you design a pitch or you design a marketing strategy, you're speaking directly to the emotional and physical issues or challenges that that prospective customer has. The other thing is you must know more about the customer than any prospective competitor of yours. Know more about them, which means you've got to invest the time. And that's not just about what their needs are, but also who they are, where they are. How do they consume what it is you want to sell? Are they willing to pay for what you're selling? So you get a very clear picture of who your customer is. Any questions? No? I don't think I was that good that there are no questions. So can I ask a question then? And we have to wrap up quickly. What has been, for those there are some people that raise their hands in terms of customer acquisition, what has been your primary challenge regarding finding and growing your customer base? Anyone? You raised your hand. What has been your primary challenge? Anyone? So there were no challenges then? Yes, go ahead. Oh, okay.
Yeah, I have a question in terms of, can it be a case sometimes that you are ahead of time, or an idea or concept can be ahead of time or out of time? That's my first question. And based on your answer, then I would answer the next question, like a follow-up from that.
Okay, that's always possible, but part of it is, if you're doing enough market research, you will be able to see where the trends are taking you. Will be able to time the deployment of your solution or your idea to match the changing dynamics on the ground. So even though you'll find maybe there'll be instances where, people always say, I'm ahead of my time. Yeah, but you're not in business to be ahead of your time. You're in business to solve a problem that's now that you can see 5 years down the road where it's going to go. And so you start now and you start to build on it.
Yes. Next question then. In terms of, and this has been a challenge of mine, in terms of culture and understanding and educating around a specific area, and infrastructure being lacking in lots of fields, and this is specifically to the healthcare field and to the social care field. And I think that is where the challenge lies. Is there a need? I believe there is. This is in relation to gerontological services, as well as palliative and end-of-life care services. Mm-hmm. And it is more of an emerging field and more pioneership. And as a result, it is a very long uphill battle at times. And the support, I think, within different departments within the society, different aspects of society, it's just not there. And it's not that it's not there globally, it's just not there here in Barbados or even the region. So that has been a challenge.
For me, I see it as an opportunity.
It could be, it definitely is an opportunity. Yes, it is an opportunity, but those are some of the challenges that are presented.
So what I would encourage you to do is to stop looking at them as challenges and start viewing them as opportunities. And the reason for that, it completely changes your mindset as to how you approach it. I think there's an opportunity to be the first and the leader in that area, and to be the sought after person that leads on everything related to that. So a lot of your work clearly has to be involved in education. So you've got to be able to educate the industry, educate the stakeholders, the beneficiaries about why they need this service. The reason Apple is so successful, who would have thought that they needed all the things that Apple produces? They created the market, and they created it by developing consistently over time an education model that allows us to do it. All of your efforts, I believe, at this stage can't be about trying to sell your solution, but really building the market for your solution. And that is about educating the prospects of the need to have what you're doing right now. So when you're early, it means you need, a lot more time is invested in educating. All right.
I'm Dwayne Howard of Kindness Creative Studios. Now, one of the things in your presentation, it talked about the retention of clients. And especially for a startup starting young, there's that tendency to be in it yourself, serving your clientele. And as your customer base grows, so does your need, obviously, for employees. But you want to have a sense of a duplication in your employee where they're providing that same excellent service that your present clientele and growing clientele are accustomed to. What are some keys in developing the team that you would suggest when you're speaking about the art of retaining clientele in, because a lot of the times what ends up happening with the founder is that you can easily fall into micromanagement, which can lead to burnout. Yeah. All right. So what are some keys that you would suggest in your experience that provides good educative tools for a founder to duplicate and also to, again, enlarge his clientele, sorry, not his clientele, but his employees' capacity to serve with the standard of excellence that he would expect and that his clientele would expect?
I think that's a perfect indication for me and a segue for me to get off the stage, because that is exactly what Rosalind is going to deal with. How do you build a winning team?
Oh, good.
And so she's going to perfectly answer exactly what you're addressing, and I would let her do that for you. And I'm not going to steal her thunder. Thank you very much, guys.
Good morning, all. I feel as though that were staged. It wasn't. I'm Roz Jackson, for those of you who don't know me. I've been around a long time. It doesn't show I wear well. I spent the first 6 or 7 years of my professional life as a maths teacher. And as a maths teacher, when I was a little too progressive for the school I was in, I got fired. So I thought, good maths teacher, I'll be a good accountant. I applied to what was a forerunner of Ernst & Young in those days. And I got hired, but I was told by Peter Booz, who became my mentor for life, that auditing is too boring. You don't really want to do that. You have too much life and experience and drive for auditing. But he was really looking for somebody to head up corporate secretarial as the offshore sector was taking off. So I had a brilliant career of 23 years at Ernst & Young. The last 2 were a little bit like the water's getting too hot for this frog as we globalized. And so I think I was an entrepreneur within a large company. I was always then having some tensions in the global environment because they didn't understand our corner of the globe and weren't that interested because it was fairly small. So then I got into my own business, Caribbean Catalyst, and on April Fool's Day, we celebrated our 11th anniversary. We're no April Fools, we're still around. And we do work primarily in Barbados and the OECS, right? And we're HR consultants, and selling a service and selling a product are 2 very different marketing and selling. But in each of them, you are selling what value does it add? And is it, and people will come to me and say, before I get into the team building, well, we would like you to do this project, but your price is too high. I said, sweetheart, I'd rather work for 80% of what I work for now and go to the beach on Fridays. But you would not walk into Colombian Emeralds to buy a ring for your wife and say, oh, I only want to pay 50% of that. We have a pricing structure. I think I just messed up. We have a pricing structure which is fair. If you don't consider it good value, walk to the next store. Okay? We have to be careful not to devalue what we are bringing to the market. If we don't value it ourselves, why should somebody else value it? I'm not telling you to go overprice yourself, however. So it is getting that balance. And sometimes if you take a discount, you have to know why you're discounting. Is it to build a relationship? You know, if I get a foot into a big conglomerate, I will do a little discounting to start to build a relationship, okay? So, my topic today is building a winning team, and we're going to talk about pitfalls. Before we get into that, how many of you are in your own business? By a show of hands. How many of you have employees, at least one? Okay, so I'm talking to the others for the future and to you for now. That's fine because entrepreneurs should always have their eye on the future. Selwyn mentioned the golden circle. I'm a big fan of Simon Sinek and his thinking and so. And that why in there, why are you in business? And if that's not that to make a profit or a living, that why is what it is I'm bringing to the market that they really need. The result will be the profit. If the only why that is driving you is to make a living, you're going to fizzle out. Right? We have a very powerful why at Catalyst to help our clients achieve through their people. So I want something that my staff, my team, want to get up out of their bed on Monday mornings and come to work to do. If we're just here to get a paycheck, why don't you just send it home on Friday at the end of the month? So we need to look at the why, and that is where you get the emotional connection, and that is where you get the passion. If you don't know why you're doing it, I know how and what, but we always start with the what. So as you make pitches, you probably have to go from the why to the how to the what. As you select and build your team, you have to know the why first, and they have to be bought into that why. Let me just give you, since we're in a techie environment, let me give you the why of Google. Of Apple. Apple, the why. Everything we do, we believe in challenging the status quo. We believe in thinking differently, okay? The how. We make products that are beautifully designed and user-friendly. The what. We just happen to make great computers. You want to buy one? Now, if I start with all the features of the computer first, your hand would go down. Right? My boy started with the why. Well, everybody, we are here to connect investors to entrepreneurs. Huge why, so everybody can prosper, right? So know your why. What's your why? And when you're building a team, whatever your why is, you have to find ways to find out their why. Because every member of your team is a representative of your brand. And talking about how we build that team, for instance, I have a team of 7, self-included, and the hardest position for me to get right was our receptionist, okay? And every time I go into a doctor's office, I think they don't get it, right? And I want to make a lifetime of doing something about that. 2 things in a doctor's office. The actual decor. I told my daughter she needs to make that a living. The date of the magazines. And the quality of the receptionist, right? Any medics here or any family medics, send them the message, okay? It's appalling, but you're sick and you gotta go to them, right? I always tell them if I had clients waiting as long as my waiting room, as they keep me waiting, I wouldn't have a business. That's another thing. We have to understand that. How do you find out what people's why is? Why is my receptionist? I eventually said, you know what? Our receptionist, I'm not going to call you a receptionist. I'm going to call you a director of first impressions. So it's how we think about ourselves. And the receptionist I have now, everybody says to me, where do you get her? How did you train her? Every time I call in her or come in here, she's so upbeat. I said, I treated her the way I wanted her to treat you. And she sees herself as having a progression path as well, if she wants it, right? So we expose everybody to everything, right? So if you don't know what your why is, when you are recruiting, you can probe what somebody else's why is or whether it fits you or not. So I want you to articulate your why in no uncertain terms. You are building a brand, and Selwyn's session was on branding just now. And one question came from, and I think it was Daniel. Did you ask that last question? Dwayne, you asked the last question. How do you get your team to be as passionate about your idea as you are? You know why? Stop holding stuff close to your chest and start trusting people. If you don't extend trust, you cannot build a team. If you are the boss and they are the employees, you will never build a team. You are a team, right? And you keep it flat. I have seen a situation where in a company with lots of problems, the head honcho always pulled out the org chart to show where he is in relation to other people. I said, rip it up. He framed it. I said, I would, if I had my way, I would break that, right? As you are so superior to the rest of the people on your team, you cannot build a team. That is very fundamental. But, so, because the brand is an inside out thing. You can't say to me on your team, Roz, you must be responsive to my customers. My customers, listen to my language properly. However, if Roz says, by the way, we were supposed to get a medical plan going. 6 months ago, we talked about what has happened. And 6 months later, you've said or done nothing. You are not being responsive to me and my needs, but you expect me to be responsive to your customers and their needs. So it's the good old adage, treat your team the way you want them to treat the customer. Peter Booth and I had an ongoing argument at orientations. He would walk in after me and say, Roz is going to tell you that people are first, the customer is second. I said, no, that's not what I say, Peter. I say, treat your people the way you want to treat your customer, and it's all over. After about 3 years of this banter, he said, but customer is king. After about 3 years of this banter, he came in and brought a little thin book like that. Customer is number 2. Somebody from the North wrote this book that I could have written in my sleep. He got hold of it and had the gall to put it on my desk. I chewed him up. I didn't even read it. I said, you can have the fun, okay? So if we're branding inside out, people need to feel that brand and get passionate about it, right? So we can't be, this is a very, very important slide. This happened to me last week. You all know Ron Johnson of Blueprint Creative, or know of him? Everybody knows Blueprint? No? Really? Come on, you don't want to give him any airplay? Sorry. Ron was sharing a panel that I was facilitating and talking about branding and pitching. He said to me when they first started out, he went to do this pitch and the client, prospective client said, I don't like dealing with small businesses. He said, well, we're not a small business, we're a young enterprise. prize. So how you see yourself and the language you use must be one and the same. So if you're going, we're a small business, we can't raise no money, poor me, it is not a charity, it's a competitive race we're in. So you have to create in your mind the why of you, how you project yourself, and that your words match your actions. In fact, your actions, the words are the easy part, the actions are the tough part. So that's just a little twist of language, right? So in terms of where we're going, whether you have a mission, vision, or values written down is really not important, you know. But how you behave says it all. And one of the things I say in selling, we are HR consultants. So my view is this. There are two things about our brand. We don't sell anything that we are not practicing ourselves. And if we are asked to propose and we don't believe, and this speaks to the lady who talked about gerontology, we don't build, the client, the prospect doesn't believe sufficient of what we believe, we will walk away from it. Because it is about human behaviors. And most of the time, the people looking for HR quick fix are the worst people. You always start from the 101 with them. Basics, right? So there is an education process, and I've refused a certain entrepreneurial company twice to work for them. The third time they came back to me, they said, are you ready to work for us? I said, that's not a question at all. Are you ready for us? And this is what ready for us looks like. He said, God, you're a hard woman, right? And then I eventually agreed to do one specific thing and see how he actually led it before we would go on. Right? We didn't go on, okay? Right. So when you're building your HR team, it is not about tinkering. And the first person you employ, you're building your team. If you employ them part-time, whatever, you're building your team and your brand. So it is not about what's at the tip of the iceberg in building a team. It's about there. So what do you really value? Not what is your stated value. What is your behavior on the inside around here? And I say, we do a lot of recruitment for clients, and I insist, so we have a candidate database, and I insist that the candidates interview the company as well. Because there is still an old guard mentality that we have a job that we're giving away. In fact, once, about 4 years ago, I was interviewing with a client. We had 3 people from the client, myself, and the candidate. And the HR person said, if we give you this job, what would you do in the first 90 days? I said, stop, don't answer that. No jobs are being given away here. If they like what you brought to the table, offer you the job, and you choose to accept it, what do you think you would bring in the first 90 days? Let's rephrase it. Treat people with respect. I don't care if they sweep your yard. That's how we build a team. Okay? So this is a busy slide by design. Okay? How do you build a team? You hire right, you develop and train right, you pay right, and right for paying for you may look very different from right for paying for Massey. Okay? You reward, you recognize right, you promote right, and you fire right. Nobody likes me to say that. You fire right. And the smaller your team, the more damaging it is to keep a misfit on that team. And when you hire people for technical skills only, And don't worry about the why, you're going to have some serious misfits. And if you're in a sales environment and somebody is the best salesman, but they're messing up the whole team and you persist with them, what are you saying to the team? This is acceptable behavior. Okay? So let us work through some of those things. We spoke to it before. You are not hiring for today only. You are hiring for the future. Okay? So when I hire a receptionist, I want somebody who doesn't mind making coffee for a client, don't feel that's beneath them, who understands the difference between servitude and service. That's a very big difference, right? And sometimes we get trapped in it. To the point where she will come and see, if she sees me having a day like, say, Rose, you want a cup of coffee? I say, you get it for me? Thank you, sweetheart. She doesn't feel belittled by doing that. I never asked her to do it, right? But she can also, when I am stuck on something, I'm doing, I say, Angela, help. How do I get out of this program, right? She has other skills and we leverage them. And Selwyn talked about look at your opportunities, look at your challenges, don't look at them as opportunities. We do not do SWOT analysis. We do SOAR. We look at strengths, opportunities, aspirations, and results. So when we go to when we're proposing on planning and people want to do SWOT analysis, I said, no, you keep focusing on the weaknesses and the threats, not that you're oblivious to them, because when you look at your opportunities, you better consider the threats as well, right? So how you approach people and how you approach your business and how you approach the growth of it is very, very important. So if you don't see a real future for it and you don't have a passion for it, get out now before you spend any more money, okay? Determine what you want the culture. You are at a place now where you map the culture of your organization. You're not inheriting something that you now have to go change, which is a lot of fun, by the way. I've done that and done it nice and had a lot of fun doing it. Got a few gray hairs too, so my hairdresser likes me better. But you had to cover them up. What do you want your culture to be? So we want to have a flexible but productive environment. We want to be flat, and we want to be very open and honest in communication. Those are things that you decide what you want. And decide what your sacred cows are. And I'm not saying that in a religious way, but what are the things you will not tolerate? Because when you close your eyes to certain things because somebody is doing something okay, and you feel that they're indispensable. By the way, is anybody indispensable? No, I'm not indispensable to my business. I can leave it for 2-3 weeks easily and it keeps going. And some of my customers say to me, how do you go away for 2 and 3 weeks? I said, well, if I were in QEH, strung out for 2 or 3 weeks, I would hope my business isn't going to shut down. But we as entrepreneurs, and a danger is to make you the business and the business you, right? As soon as I feel I'm becoming too synonymous with Caribbean Catalyst, I push the others out. Come, you all got to get out there. And people have to understand that we have some depth. But it is an ego thing, right? And we have to have a certain amount of ego to go it alone as an entrepreneur. But then if we're building a team, we have to be able to quiet that ego, okay? Never underestimate the power of passion. Let's see, and when you are hiring your team, this is what you have to probe. Same Simon Sinek, listen carefully to this quote. Working hard for something we don't care about is called stress. Working hard for something we love is called passion. So if you get more stress now from your startup, question whether you love it enough. Because you need to be able to bring people on board with that same passion for your business. And you have to learn to extend trust to people if you want to build a real team. Okay? Hire for substance, not for form. And retain for substance, not for form. Why is somebody laughing? Right? Personality is I always used to say to Peter Booth, his nose always probably itches when I do presentations. All that glitters is not gold, okay? So, but there's certain people can put the personality on you. Is it integrity you're looking for or personality? I'm looking for integrity. Is it substance or style? And by the way, is it good intentions or is it results that you will give? The road to hell is paved with good intentions. I ain't going to hell nor my business, right? So we want results. And just quickly, sort of the 5 behaviors that are going to build you a cohesive team. If you don't trust anybody, why are they working with you? Okay? So you have to be able to extend trust, and by extend trust, every month, all 7 of us sit down, look at the P&L. I don't have to drive revenue and collections, receivables, anything. Jackie and Laura, them each hold on to something, and they run with it. You cannot own what you don't know. So when we keep a lot of stuff close to our chest, because if we're trying to cheat the tax man or anybody else, or cream off stuff and cry poor, then you cannot build a true team. True or false? You have to have an appetite for constructive conflict and some robust dialogues and dealing with the elephants in the room. Elephants in the room suck out oxygen, right? So if you are building, and this is, I'm going to go into this more with the pitfalls, because only if we extend trust and we have those constructive conflict, are we going to build true commitment? You're talking, how do I get my team to be as committed to this venture as I am? This is the pyramid for you. When you get that commitment, you hold people accountable. And we're not very good at accountability on this rock sometimes. And when you're doing that, you'll get the results you want over time, right? If you're leading without listening, you will never build anything sustainable, right? If you're not listening, you can't deal with what's going on in people, right? And if you're not allowing them some opportunities, no. They said pitfalls, okay? Beware of family and friends as your business startups, okay? I say beware, right? Beware. Just because it's free labor, it is not necessarily your best foundation. And if, worse yet, don't start up with unemployed family or friends because they may be unemployable and you chose to help them out, right? And they're the hardest to fire, right? Because your mother, your aunt, everybody can come down on you for doing it. So I'm not telling you never to hire a family or friend. I got to tell you the way I did it. I hired people I didn't know, and they're just like family or friends to me now, the ones who had survived me. That's the better way to do it, okay? Now, we are a startup, so we're not going to have a lot of money, all right? There was one other thing on that slide. Can I just hit back to it? Right. Are you looking for Mr. Right or Mr. Right now? Hire in haste and repent in leisure. Understand that. Probe carefully a person is passionate about your business, even if it's somebody you're going to be delivering your mail, sweeping the ground or whatever. Do they understand the business you're in, and do they have any interest in it? Okay, now we can move forward, right? You may have to pay below market, but you cannot pay far below market. Put yourself in that person's position, right? If you pay below market, then you have to be able to complement or supplement that in other ways. Find low and no cost ways to reward and recognize people. Make sure there's personal and professional development for your people or your person, right? And then you need to get them, if they're not passionate about your work, they'll never say TGIM, right? When I say that on Fridays, I say, okay, I know you're all looking forward to Mondays. You always laugh. The Monday morning, I say, thank God it's Monday. I said, and I don't mean that because you have an abusive husband or anything, but because of our why we want to do it. My team goes so beyond the call of duty, and I have had clients try to poach my people and offer them a lot more than I can afford them. You know what one of them said to me one day? You know, they were trying to get me 2 years ago, and they offered me like 50% more than what you're paying for me. I said, you idiot, you're still here? So she says, I told them how much I have learned from working in Catalyst. I could never put a dollar amount on it because they're exposed to stuff, they're developed. You have to be confident in yourself to let go and include other people if you want to build a seriously entrepreneurial team. And with that, if you have any questions for me or any comments, I'm trying to get into your brain now and hopefully into your heart. Any questions or comments?
Hello. Yeah. I'm going to just a comment based on, because if there are any questions, we need to make them quick because we're way over time, and I just want us to make it to lunch and back so we can get stuff. But I want to specifically address what you said about not doing SWOT. I'm so glad you said that because I've been against the SWOT analysis for quite a long time. What SWOT does is it forces you to look at the weaknesses in your business and completely misses the opportunity to optimize your business for the opportunities that are in the market. And so if you focus on the opportunities and look at, okay, where are the deficits in my business and how can I scale the business or reformulate the internal structure of the business to capture those opportunities, you are more or less just in survival mode, trying to focus on where my weaknesses are, where the threats are. And so I just want, if you can just speak a bit to that
yes.
concept.
The thing is, if we spend a lot of time beating ourselves up about our weaknesses and our threats, it starts to create for us a downward spiral. If we then say, these are our strengths, and in fact, let me tell you something we did 2 years ago. We had done our individual sort of strengths and so, and we had a team session, a half day, where all of us had to say what the strengths of the other person are. And then when we did that, we said, how are we leveraging those strengths as a team? So you leverage strengths, and when you are hiring a team, use some form of psychometric assessment or analysis to see what you yourself have and where you need to be complemented. I'm going to tell you, I suck at detail. I'm a helicopter person. I hate being in the trenches. Starting up my business, I'll spend time in trenches because the bank was on my back if I didn't do good in the trenches. But I found people who were detail-oriented and let them do what they love and let me go in the helicopter. But I say to them, you can get used to this height. I can carry you up there every now and then. So know your own strengths And don't if you're hiring people that you need to micromanage, you're a bad entrepreneur, you're hiring wrong, sorry. Hire right. Even if you can't afford them full-time, but you want them just part-time. Even if you can say to them, if we make X amount of dollars, then I'll give you a bonus at the end of the year. Do whatever you have to do. But if you have people passionate about what you want, do not beat up people about their weaknesses. We use that same approach in performance. I don't even call it performance management. I can't manage anybody's performance. I call it performance measurement and improvement, because most performance management systems is just to get a number to plug into a bonus system. Waste of time. If measuring performance is not about improving it, don't do it, right? So we use, and you can research SOAR, S-O-A-R. You'll find lots of literature on it. It's been around about 10 years. There are some good case studies there on it. And it's an approach you can use in a number of different things, right? So.
Thank you very much. Please give Ms. Jackson a round of applause.
Roz.
She said Roz. So thank you very much, Roz.
Thank you.
Just so you know, before we break for lunch, there are exhibitors on either side. It's important that you check them out, because they have a lot of valuable resources and support structures that you can benefit from. So right here on my immediate right is Accel, which is a microfinance organization. They lend to small to medium businesses and enterprises. And then we've got the Public Workers Cooperative Credit Union. They are really good at working with entrepreneurs and helping you to understand financial intelligence. And we've got Capital Finance, who will also be part of the session tomorrow, I think, on the important role insurance plays in your business. And a lot of entrepreneurs forget about that aspect and just leave it entirely out. On my left here is Regis. Regis is starting up a co-working space in Barbados for entrepreneurs, and small office spaces that you can rent. So you can have a chat with them. They've got information there that you can find out. And of course, we've got our trusted YBI, which is the Barbados Youth Business Trust, and everyone knows the Barbados Youth Business Trust, but you should really talk to them about their programs. I want to encourage you to engage with them, and I'll see you back here. Sorry, we have to make up time. So I'll see you back here at 1. Sorry, lunch is in the cafeteria down the hall to your right once you've exited the door.